Hello, everybody. Good afternoon. I'm Jim Chikaris, Managing Partner of Apex CPAs, and this is my partner, Lucas Vandy Woestein. Looks like most everybody that we have here are clients of ours, and then a few others that are just interested in learning more about the PPP Round 2. We hope you find this very informative. We're trying to be very respectful of your time, and we can maybe keep the presentation about 45 minutes and then open it up for some questions at the end. Also, this is designed to be a very bilateral discussion. So even in the midst of the presentation, if you have some questions, you can use the chat feature. We have our marketing director, David Rosenbrock, is also on the presentation in the background and can field those questions and send them to us, and we'll see if we can sort of address them as we go. We are very proud to announce that we are presenting this event from our Phoenix, Arizona office. I'm sure everyone got their cameras off, and I'm sure everyone's kind of snarling right now. It is like 66 degrees and it's really sunny. It was, matter of fact, we had the windows down today. It got a little warm in the car. So anyway, getting things going here. We opened an office here in Phoenix back in October, and it's going really well here and exciting, very exciting. And looks like we may even have a few folks from Phoenix on the event today. So,
but David did tell us that it's warming up there. It's about 20. So
yeah.
It's good things coming.
So, but great. But we'll. What do you think? You want to get on with the program and get started? Yeah. So PPP Round 2. Exciting time. I'm sure some of you maybe have applied already, and some of you maybe have received your funds. But for those who haven't, we hope that maybe this will walk you through the process. And those who have received funds, it'd be a great overview too to see how some of the loan forgiveness, what the eligible expenses are, and so forth that are different from this round versus the first round. So we hope that even if you've received the funds, that you'll get some benefit out of how to utilize them.
Absolutely.
So,
just administratively, I think I've got the video spotlighted here, and it should show up on yours, our PowerPoint and screen share there. If it's not, if you right click on our video and pin it, it should put that right up. But I think as long as the screen is shared, that should be the main thing that you're seeing. And then for questions, if you want to put them in the chat, David, our marketing director, will be feeding those to us so that we can answer them as we go where possible, and we'll try to make sure and get to all those questions. Of course, if for some reason we miss you on that, you can call us, let us know, shoot us an email. We'd be glad to talk through those items.
And our plan is to, like on this, after the video is done, we could post it on our website. So if they want to go and share it with anybody or want to review it again,
yes,
you'll be able to access it through our website.
Definitely. So, okay.
All right, let's get started. All right, it is definitely a VUCA world out there, right? Volatile, very volatile, a lot of uncertainty, complexity, a lot of ambiguity. So, very unpredictable environment out there. Although, in my opinion, it does feel less unpredictable than it was, let's say, maybe 8 or 9 months ago. So I do feel that we're coming out of it. All the economic indicators, all of the thought leaders on the economy say that the second half of 2021 is gearing up to be a very, very exciting and robust economic time. So I think taking advantage of any PPP Round 2 money to strengthen your balance sheet, improve your cash position a little bit to get us to that second half of the year. Hopefully for many of us, there'll be plenty of light at the end of the tunnel. So
yeah, I think so. And one of our investment friends it talks about how, you know, a lot of the market is overvalued, but there's a lot of pent up demand because of just resource delays and production delays at a lot of companies. So that will help to offset some of the overvaluing in other areas. And hopefully, like Jim said, we'll see some positivity coming in the second half of the year here and leading up to that. So.
All right, so today's objectives, these are really the areas we want to cover, right? What's available and who's eligible, what the application process looks like, what to expect there, updates on forgiveness, how the rules for PPP Round 2 have changed with respect to Round 1, eligible uses of the money, and then we're also going to just do an overview of some of the payroll tax credits that are available out there, the payroll credits that are available, and the employee retention credit as kind of an add-on to wrap things up. And then, of course, there'll be questions at the end.
Correct.
All right, so let's roll into what's available.
Yeah, so in this new round, there was another $284.5 billion available. 35 of that is allocated to companies who didn't get a first-time PPP loan and wanted to apply for that now, so that's available. The max on the second draw PPP loans is $2 million. It was still $10 million if it's a first draw PPP loan, but that would have to be a company with a lot of employees with high salaries.
And honestly, I haven't come across anybody who didn't at least try or apply or didn't get first round PPP money. So if you're just kind of, showing up to the party now for first round PPP, that, hopefully they're able to secure it, now if they didn't already.
This is a question I hadn't thought of. I wonder if you can apply for both.
Both at the same time.
Because you don't have to have the first, well, you do have to have spent the first one's money. That is a requirement we'll get to, but I wonder if then you could, if you could immediately apply for the second.
If you get spent it by March 31, I guess maybe. Okay.
Boy. Yeah, the second draw is also fully forgiven if it's used on eligible costs at the company. It's basically the same calculation as before. It's 2.5 times your average monthly payroll costs. They do allow you to use 2020 if your payroll was higher to get a higher amount. Otherwise, it's all the same documentation and calculation from 2019 payroll. One thing they did change there is if you're in the food or hospitality industry, so restaurants, hotels, you get 3.5 times instead of the 2.5 times, and that they're doing that by looking at the NAICS code, which is an industry code starting in 72 that includes those.
One thing that did surprise me about the 3.5 times is that I felt like there were some industries that were really, really hurt equal to the restaurant industry that for whatever reason they excluded from the 3.5 times. Like, for example, like hair salons and spas and that sort of thing. They're really not considered hospitality. They're considered personal service type businesses. But yeah, they were not granted the 3.5 times.
Yeah.
And I tell you, we have seen in many cases, it is definitely worth the exercise to just double check rather than defaulting and just taking what the 2019 is. Take a close look at your 2020 calculation, to see, because in many cases, the 2020 can be higher than the 2019. As a matter of fact, we actually applied for PPP Round 2, and that was the case for us.
Yeah.
And so we were really glad that we went through that extra exercise. And we did it mainly just because we wanted to understand how the calculation worked. And we're like, oh, wow, okay, that actually worked out better.
There were some differences in the application process and just the things they were looking at. So I think that's good.
Yeah.
And then it's available through March 31st of 2021.
So not a lot of time.
Not a lot of time. And I saw a news article a few days ago that was saying, I think there was 180 billion left and Congress was wondering why. I think part of that is because they're being a little more specific on the application product. I mean, just as an example, in ours, they sent it back and said, hey, you're missing an apostrophe in your name. oh, okay. So there are some very ticky-tacky things that the SBA is making sure they've had more time to look through it. And there's also an issue, I don't think we do touch on it, but that if somebody is in process and they filed for forgiveness of PPP 1 and they haven't received it yet, that they had an issue where it was kicking back those applications.
On round 2.
On their round 2 application. Yeah, so mostly just a glitch, or they can't have 2 applications in at the same time. There's no regulatory thing that says you can't do that. But anyway, that's in there, and I think that's made it for it to be slower for the money to kind of get out.
So it was interesting because we had a conversation with our banker, and he specifically said, as counterintuitive as this sounds, if you have not yet submitted your application for forgiveness for round 1, apply for round 2 first. Then once it's approved and funded, then apply for forgiveness in round 1. If you've already applied for forgiveness in round 1 and that has gone through the process and you've received your, I guess the SBA, they send a forgiveness letter, right? Saying that it's forgiven. If you have that, then you're totally good applying for round 2 if you're eligible. But if you are still waiting for that response from round 1 because you've submitted your application for forgiveness, they will kick back the round 2 application until the round 1 has cycled through.
Yes. Yep. So, okay.
Who's eligible?
Yeah, who's eligible? So the first time the employee limit was 500, which is kind of a general SBA employee limit. If it was a restaurant, it was 500 per location, which is why we saw some of those big restaurants that
Ruth's Chris.
got PPP money. This time it's businesses with less than 300 employees. They're saying that to be eligible, you have to have used or will use all the PPP 1 funds. That's just really a checkbox or an initial that you have to put that's going to happen prior to receiving the money. And we did have a note here that if you have not yet filed for PPP 1 forgiveness, don't wait on that until after you've filed for PPP 2. And then the main requirement is that there must have at least a 25% revenue decrease in 1 quarter of 2020 compared to the same quarter of 2019. We did have some questions on, well, could it just be any 3 months? We haven't heard any success with that. Does it have to be the same quarter? And it does say the same quarter. So first quarter of 19 to first
calendar quarter, right?
Yeah, and calendar quarter, yes. Some details on that revenue includes basically all sales, interest, dividends, rents, royalties, fees, commissions, reduced by returns and allowances. Does not include PPP proceeds, or one thing I found for a client is that they had sold, it was really stock, but it was part of a business, that if you have a sale of a business, it does not count in that number either. And then revenue does, what we found after, it's not in the application, but the bank came back with some SBA guidance, and they had us include the revenue of affiliated companies on the application. So mostly this would apply to if you have a company and you own the real estate in a separate company, they make you aggregate those. Very importantly, you would want to take out the rent that you pay yourself, because those don't count. Or if you have separate companies that are affiliated and you're having to do this, you could take out the affiliated like management fees or anything like that. That is in the SBA rules that you can disclude that, and that's can be very important. Yeah, the intercompany revenue.
And we have had questions where it's like, well, what if I was down, 1 quarter compared to the prior year by 25%, but I finished the year actually up over last year? We've seen that happen. As a matter of fact, it happened with us. And the only reason, honestly, that we qualified is because they changed the due date of tax returns. So when they moved the due date from April 15th to July 15th, most of that, the tax filings were then deferred into the 3rd quarter. And then also more people went on extension because there was a lot of uncertainty, which was still an impact on our business because it really disrupted the rhythm. But but it caused the second quarter to be down more than 25% relative to 2019. So we were eligible to apply. But you don't necessarily have to be down for the year. You just have to be down one quarter compared to that same quarter in 2019.
Yeah, and we've seen, they make these rules to try to apply to the bulk of businesses that would need it. We have seen some that unfortunately it's like they're down every quarter 15 to 20% and down for the year 20%, but they don't actually qualify because they didn't have one quarter that was down 25%. In some of those cases where people are close, we're taking a deeper look into their accounting to make sure that, a deposit wasn't recorded a day or two early or late around the quarter ends that is disqualifying them. And we've had a little bit of success in helping people find that and just dialing it in. But
or errors in billing. There's an error in billing, timing and billing, or if a customer was invoiced and then they never paid the bill, was that really a sale? So, we look at all of that, obviously, just to, do, whatever we can within the parameters of the law to help them with compliance if some of them are really close.
Yeah.
Yeah,
and I haven't seen any guidance on cash or tax or cash or accrual basis. I think if a company keeps their books on the accrual method and converts to cash for the tax return, that you can kind of use either, as long as you can justify it with the reporting. And one other way to qualify is by just submitting the annual tax return for both 2019 and 2020 that shows a 25% decrease in total. Obviously, to have a total 25% decrease, there would have to be at least one quarter that was more than 25%. But in some cases, people don't really keep good quarterly records, and that just is something to help them with that.
So
if they can get their tax return done, before March
31 and submitted, right?
As far as the application process, do you want to go through that, Jim?
No, you can.
Okay, you're good. I was just making sure there were no questions here. Okay. We were saying to utilize the same bank as PPP1 if possible. They've already got all your information. Most of them have a similar portal. They're able to pull your SBA loan number, which in a lot of cases, we had a bank loan number, but they had to find our SBA loan number and put it into the application. There is a paper application that you can print. However, there's nowhere to submit that. Each bank generally that we've seen has a portal, and they ask all the questions. They fill out the app. At the end, you go through and you initial everything. So
before we move on, so we do have in here, like, you can see us if you need a referral. We experienced in PPP1, some of our clients that were working with larger banks had a really frustrating experience getting their initial round of PPP funding, getting their applications submitted and so forth. The smaller banks were actually given more VIP treatment by the SBA later on in the PPP round 1 application process to help sort of allow some of those smaller banks to get in on the action of, because these banks were compensated for the loans that they pushed through, and they were able to be a little more streamlined in their processes and give the smaller businesses the attention that they needed. A lot of the larger banks were pushing through their larger customers' PPP applications, and the smaller ones were not getting the help that they needed. So if you experience something frustrating like that with maybe a large national chain, I'm not picking on any one particular chain, but sometimes working with maybe a smaller community bank for this application, it seems now that we've been through this around this rodeo once before, the application process was fairly straightforward.
There were some weird things at the beginning, like before, where I think banks were just getting their feet under them, and a few of them had some weird requirements they were trying to push, but it seems to have gotten a lot more clear. And while I think it could be beneficial to go through the same bank as your first PPP loan, it's not a requirement.
Yeah.
You can go somewhere else. You would just need all the information from your initial loan. If you wanted to change or just not having luck with the bank, you could definitely see us for a referral in that regard.
But we're expecting that the volume, the number of applications submitted in round 2 is lower than the first round.
Correct. Yes.
So, okay.
Yeah, like we said, if your 2020 payroll is higher than 2019, you should use that to maximize the amount. I also had a question in that regard where a client, right as we were helping them prepare the application, they had an employee leave and they were going to reduce the amount of what they were asking for because of that employee leaving. And we advised them to still stick with the max amount because you get only 2.5 months of payroll, but you have 24 weeks. So basically 6 months to spend it. So even if a person has left right now, you're going to be able to have the payroll to get forgiven on that. And you only have to have 60% of it in payroll. We'll get into some of the expanded costs that you could use it for now. So definitely get the max you can in this regard. You have to provide a monthly payroll calculation. There's various spreadsheets. And if you have a payroll service, they can usually give you a summary report that goes into that. Check those summary reports because in a lot of cases, we found that the owner isn't really marked as the owner, so it wasn't putting the right max there. We're glad to look at those if somebody needs our help to just make sure. And then they want your quarterly federal payroll tax returns, the 941s. They don't have to match exactly, but that proves that you had the payroll there. And then any other benefits or payroll costs allowed, we'll touch on the definition of payroll costs later, but basically it's your gross payroll plus any state taxes that the employer pays. So if you're in Illinois, it's unemployment tax. Basically, there are other states that have some business taxes that go in there. And then benefits like the employer portion of a retirement plan or health insurance. Again, just the employer portion. Some of those get a little more complex to calculate because you have to take the gross amount minus what the employees have paid. But
what's helpful about the state unemployment tax part of it too, especially for those who have a fair number of employees, is the first round of PPP came a little bit later in the year, so most of the employees hit their hit the maximum for what the Illinois Department of Employment Security requires the employer to pay in tax. So in Q1 of 2021, most likely you're going to have more state unemployment tax because they haven't. Maybe not all your employees hit that threshold. So that could really, really help, or maybe it didn't help to get it.
That's a good point. Yep. And in there, it's the same maximums as before on owners. It's 100,000 for the year that can be included for owners. One thing, I believe this is in addition to the application that I saw, is that for LLCs, they put specifically on there that you can use your self-employment income off of your K-1. So that helps. That can go in there up to 100,000. And then if you're a Schedule C, they're basically using the net income off of the Schedule C from your 1040, the business income and expenses. And again, up to 100,000 per year for the owner, and then into the calculation. So those are there. You have to identify the quarter that had the reduction of revenues and provide a comparative profit and loss statement. They do seem to want the whole statement so they can see a complete financial there. And they want the affiliate statements that show their amounts. And if you've got intercompany revenue in there, you want to separate that out to call it out. And then, you submit it through the bank portal. Every bank is very different on how their portals work. And it's not always the same as when you first applied, and it's not the same portal as when you went through forgiveness. There's a lot of different portals here, but if you contact your banker, they'll make sure you get in. And if you come across any other questions that you don't know, we can help, or your banker should be able to help. They're really doing a good job of supporting businesses to get through this process. So.
Yeah, so the forgiven loan amount from PPP1 is not taxable, and the expenses are deductible. It was really, in my opinion, ridiculous how there was such a lack of clarity and disconnect between what the IRS was stating, what the SBA was stating, what the banks were stating, and there were all these different parties involved. And I remember just going through many of our tax projections this year. We had to do at least 2 iterations. This is if the PPP expenses were not deductible, and this is if they were deductible. And so there were large swings in where that tax actually could end up. So thankfully, the IRS, in my opinion, got it right.
Yes.
And said, this was not in the spirit of the program. So those PPP funds will not be taxable, and the expenses that were paid with those money will be eligible for deduction for federal and state income tax for Illinois. Illinois' rules are following federal. So now every state is a little different, but for most, and I believe Arizona's too, but I'm not 100% sure on that. But I think Arizona also follows federal, but we know for a fact that Illinois does. If you have other states, please contact us, and we'll be happy to address that for you.
Yeah, we've got a list, and we can pull up your state to tell you exactly what they're doing with that. And yeah, that was a big point of confusion. And we had several companies that lost money last year, but once you factored in the PPP, they were going to have to pay a ton of tax. So it's good that they got this fixed. They updated, and these are all from that last bill that was passed at the beginning of January. That the updated easy form is basically for loans under 150,000 instead of, I believe they had it for 50,000 before. So that'll make application for forgiveness easier on that side. 60% needs to be used on payroll costs to be fully forgiven.
The original was 75.
Original was
and
75.
They softened it and made it 60-40.
Correct.
And that still is carrying into PPP round 2.
Yep. And then most active businesses, what we found, and in our applications, most of them were able to achieve forgiveness based solely on payroll without having to get into pulling all of your, health insurance invoices and unemployment, and you could include like utility expenses, where we could just simplify it and submit the 941s for the couple quarters that it covered, and that payroll, it just, I think, made it go through a lot easier, and it's not just piles of documentation to submit. So.
And just to be clear, it's like you can have 100%. You could use 100% of your payroll for the entire loan forgiveness. Mm-hmm. It's not no more than 60%. It's at least 60%. So if you cover the entire loan forgiveness with just payroll alone, is what you're saying, yes. Right? Then to do that, there's maybe another case you may want to consider, like you were going to maybe address here with the employee retention credit. You want to evaluate that. You want to elaborate on that? Yeah,
there's an area there, and we have a slide in a couple minutes on the changes to the employee retention credit, but that would be the only reason that in applying for forgiveness, you may want to use some other costs, and we can go into why that would be in a second here. Let's see. They did make some changes to the eligible uses. These were the original ones, and these are eligible forgiveness uses. There were a couple smaller ones, like interest on other loans, that were allowable uses, and that just meant that you could spend it on that, but you couldn't use those for forgiveness. We're focusing here just on the ones eligible for forgiveness. That was the payroll costs, including the employer state taxes and benefits paid by the employer. Also at the beginning there with this one, they've made it a lot clearer that you can use any number of weeks from 8 to 24. So it's not either or. If you use the money in 12 weeks, you can submit the application, which is how they eventually got to with PPP 1. Mortgage interest payments on real or personal property that were in a lease established prior to February 15th, 2020. Rent on a building that's under a lease agreement established prior to February 15th. This was probably the biggest thing we gave back.
Yeah, I would agree with that. And this goes into those, it's like looking at affiliates, right? That,
yes.
Many business owners also own the real estate in a separate entity, right? And so it's like, well, can I just raise the rent that I'm paying myself so I can increase the amount of eligible expenses for forgiveness? because this 8-week period, so people are having a hard time, ripping through all of the money to make it eligible. And so, but then the language came out that said if you own it, it's basically a related party real estate, that only the underlying interest on the loan of that property would be deductible, not the full lease payment.
Yeah. So luckily we didn't have that really affected anyone that we worked with, but when it first came out, it was a kind of a big hit because those would have been a significant expense. And then your utilities, water, electric, telephone, cell phone, and internet, we did find later those are included, those basic utilities.
That can be, again, that's why using payroll, if you have plenty of payroll and you're not applying for the retention credit, just use the payroll as opposed to pulling all those, for that 6-month period of time, to try to use it unless you absolutely need to. Try to avoid doing it because it's a pain.
Yeah. What we found in the initial ones we filed for forgiveness is we just get, hundreds of pages of documentation showing payments and bills for all these utilities, and it adds up to like a few $1,000s. So
it's honestly almost easier just to pay the money back.
Yeah, yeah. When you get to there, so it was it doesn't help if you have the payroll. You can just use that. Like I said, maybe a little bit of a change on that with the employee retention credit, but on PPP 1, where the eligible uses were there, it still didn't make that.
And if you're unsure and you don't know, give us a call, and we'll help navigate it through on specific to your situation. So we'll want to help you make it as easy as possible.
Now the new eligible uses for the next round,
they expanded it a little bit, made it actually easier.
Yes.
To use the money, right?
Yeah. So they threw in here the covered worker personal protective equipment. That includes obviously face masks and sanitizer, but also a lot of companies have paid what seems like exorbitant amounts to put a piece of plexiglass, up above cubes or on desks and all over the place. That stuff is all included in that.
So for those of you that like to play golf, so when I was down here, I played one round of golf with a client, and literally in each golf cart, there was a chunk of plexiglass. Well, it was like a thin piece of plastic hanging between the driver and the passenger that would like swing around like as you're driving. And I was like, I guess that would be an eligible expense, in terms of PPE, right?
It would be, yes.
So whatever.
I guess technically it's supposed to be for the workers. So I don't know. Well, in that case, the workers do drive the carts too. So I think it would go through. But anything in that regard that you're doing, I think would be.
But we have seen some crazy costs that people are paying for things that were just a relatively straightforward commodity in the past, throughout taking on a significant value, isn't it, with the plexiglass?
Yes.
And all that.
Covered property damage in 2020. Usually that's as a result of,
rioting.
I don't know if I should say riots, but of the get-togethers and the protests.
I would say that, if any of you recall, it was a pretty dark day in downtown Geneva over the summer when there was a period of time where, everybody was asked by the mayor to sort of board up their businesses and to drive up and down 3rd Street and to see plywood on all of the storefronts and this and that. But those costs, in my opinion, would be eligible for to be included as an eligible expense. You had a cost to protect your property as a result of a threat of
or to repair it,
vandalism or something like that.
The only thing there is if you got the money from the insurance or from somewhere else, it's not eligible. Sure. Your deductible may be, but if you unfortunately had to deal with some of that, and we had several clients that did. There was Geneva. We have a couple of clients that have locations downtown. Naperville. Yeah, so that was pretty widespread.
Again, oftentimes payroll takes care of it, but these are little added ones just to as an extra cushion if you need them.
Yes, and this next one is the biggest one. And again, if you're eligible for the employee retention credit, using some of these other expenses may be very beneficial. So the next one here is basically your cost of goods sold. So it's your expenditures to suppliers essential to current operations at the time of purchase. That's how they stated it. But basically your supplies that are needed to run your business for a restaurant, your food and wine.
And that can be really help for those, a lot of help for that. What was it, code 72, NAICS, the restaurant and hospitality industry, because if you're getting 3.5 months of payroll and you have 6 months to of payroll to use, if your volume is down or you're limited as to how many tables you can fill, being able to utilize your food from your suppliers and all of the kitchen things that you would need, product that you would need to prepare meals and all of that. That expense could really help for the hospitality and restaurant industry.
Yes, and we've got a client. They've got a sports bar in downtown Denver near the baseball stadium, and they were totally shut down. Colorado just opened up to, I think, 25% capacity in the last couple months here. At the beginning of January, they opened up to that. So, I mean, they, as a sports bar, you wouldn't usually do a lot of takeout. They've just opened to a couple days. So I think in this case, that's going to help them a lot to be able to still get that forgiven. And then there's also this covered operating expenditures, which is like software that you need to run your business, cloud computing, product or service delivery, accounting expenses, payroll expenses. So they threw a lot of additional things into the eligible uses this time, which is good.
Yeah, and they must be used during the covered period, right?
Yes. So that's you have 24 weeks from when you get your money is the max on that. And you can file once the money is
spent,
used.
right? So which can oftentimes be before the 24 weeks.
Correct. Just a refresher on payroll costs, salary, wages, commissions, tips, count in there, vacation, sick leave. If there's an allowance for dismissal or separation, payments required for group health care, including insurance premiums. Again, if the employee is paying part of those, you would need to reduce that from it. Retirement benefits. So if you do a match on a 401k or a simple IRA or some kind of profit sharing, the employer portion of that is included in here for payroll costs, and any state or local taxes assessed on the compensation of employees.
This really hasn't changed.
No, and there was some confusion on this second round that the new eligible uses here could be added to the payroll costs to get a higher loan amount, which was not the case. The loan was still based and is still based on payroll costs.
Right.
Your average monthly times 2.5 or 3.5 if you're a restaurant, hotel. And the new eligible uses are just things you can use it on in the 24 weeks. So that was a point of confusion for a lot of people, and it wasn't stated well, so it was very understandable.
Yeah, we touched on the 60-40.
Yeah, and it's not a cliff. If you don't hit 60%, it doesn't just, it's not that you don't get anything. It just becomes a scale of where you don't get the full thing forgiven if you're under 60%. But we haven't really run across anybody that's
right. I mean, when they adjusted that from 75-25 to 60-40, and then they extended the period of time, it made this almost where it was going to be, most people were not going to be limited because of this new ratio.
Correct. Just to touch on the interaction between the Paycheck Protection Program and payroll credits, and to kind of update that based on the new law there, if you remember when they passed the first law, I believe the CARES Act, they had the COVID sick pay and FMLA pay, where pretty much every business was required to provide a certain amount, 2 weeks of sick pay, and then FMLA pay for 10 weeks. There were maxes on it, but every business was basically required to do that unless they applied for an exception. Starting January 1st of 2021, it's no longer required that companies provide that. However, if you do provide it, the credits are still available if you're paying the employees for those amounts. Payroll costs that are utilized on those credits above or the employee retention credit below here can't be used. That payroll that is used, so like if you paid 2 weeks of sick pay to employee, that can't go into your total payroll costs for PPP forgiveness. You can't double dip on those items basically. And then the employee retention credit, and we've got another slide that goes into more detail, but what they changed on that is this was a very lucrative credit, but it was not available to any company that got the Paycheck Protection Program loans. So there weren't many companies that were eligible for this because they got that. The new law passed in January made that retroactively available if you got a PPP loan. Again, only though if you have payroll costs in excess of what you need to get forgiveness, which makes it a little bit of a hairy calculation.
You can't use the same payroll cost for forgiveness as we use for the employee retention credit. It can still be payroll costs, but it has to be the payroll cost over and above the amount used for the forgiveness calculation.
Correct. And very simply on that, the calculation there is to take the total payroll costs in the covered period and then subtract the bare minimum that you needed to get full forgiveness, and then subtract any payroll that was used for COVID sick pay or FMLA pay where you got credits, and that leaves you with a delta. The complexity of it is that it kind of needs to be done on an employee by employee basis to make sure you're not going over some of the other limits. But once you get past those, I think, yeah, the credit can be very lucrative for a company that applies. For 2020, the credit can be $5,000 annually per employee. It's stated as 50% of eligible wages up to $10,000.
So that can be significant.
It could be significant. The rub or the requirement, the eligibility is that you must have a quarter that has a 50% decrease in revenue compared to 2019. So say your second quarter, if it was 100,000 in sales and 2019 was 200,000, you would be eligible to start claiming this credit.
Most of the businesses that are going to qualify are the ones that were subject to like mandatory shutdown or were not considered an essential business, something of that nature, where it was like government order required them to be shut down. They're going to see a significant decrease in revenue. Right? Yes.
And then you remain eligible as long as, so if your second quarter you were 50% down, in third quarter it was at least 20% down, you remain eligible as long as you're at least 20% down. So that gets you kind of out of the initial PPP payroll costs that were needed to forgiveness, and that's where the credit starts to become possibly lucrative. And again, in 2020, it's $5,000 per employee if they had at least $10,000 in wages that weren't applied to those other things. The retroactive part of that is claimed by amending your federal 941 for that quarter. So you could talk to your payroll service, or we could help you out in that regard.
Really, this is probably one of the more complicated areas. So please don't hesitate to reach out to us if you want help evaluating whether or not you would qualify for this, how much it might be. We're more than happy to talk through it with you because it is pretty complex.
Yes.
You know.
Yes, absolutely. And that's another one where if it's close, we might want to dig into the accounting and make sure the timing of the transaction is correct with like what hits the bank or when the service was provided. Because, you know, if you're at 19.9% in the third quarter and something is just one day late or early, depending on which end of the quarter it's on, you may actually still be eligible for it just by fixing that to what it should be. The 2021 credit is actually a little more lucrative, and you don't have to have as big of a sales loss. It's only for the first 2 quarters, but you have to have a quarter in 2021 that has at least a 20% decrease in revenue compared to 2019. So a lot of restaurants in that, again, that are still starting up slow may be eligible for this, and they remain eligible as long as it stays a 20% reduction from the prior year. The credit on this one is actually $7,000 per quarter per employee. And that's again 70% of eligible wages, up to $10,000 of eligible wages. And that one is claimed on the 941.
So that'd be Q1 or maybe
Q1 or Q2. You can actually,
941.
yeah, and you can actually take those credits against your current payroll tax deposits.
Use them as a payroll tax deposit, as part of your payroll tax deposit, as opposed to paying all of your taxes and then waiting for a refund. You can actually just short your deposit. So it's like you can accelerate the receipt of that cash essentially by treating it as a credit on your payroll tax return.
Correct. And there is a way, if your tax deposits are not enough to get that money back, there's a form from 7200 to get an advance payment of those credits. Again, if you're eligible, this is a really good credit, and everybody should take advantage of it.
Now, you don't have to qualify for the 2020 credit in order to use the 2021 credit,
no,
right?
No, it's a quarter by quarter.
Yeah. So just because we didn't claim it in 2020 doesn't mean that it wouldn't apply now. Some businesses it might.
Yeah. And I haven't seen much from the payroll services, if you have an ADP or Paychecks or one of the others regarding this, but they could very well have something that would help to calculate it. We would definitely need the detail and the information from that and from any PPP forgiveness to do the credit calculation and get that submitted. So.
And so there we are. Well, we're 3 minutes late.
Oh, yeah.
It's not bad. It's not bad. Right?
We're hoping to have 45 minutes and then questions. So that's
no, it's good. Very good. Well, so we'll open it up for any questions if people have any questions about anything that we covered today. And so we'll give people a few minutes to chime in. And honestly, really, if people wanted to activate their microphone, could they do that and just ask the question?
I'm not sure. I think that may be a setting.
Oh, but, okay. Either way.
But yeah, if you put the question in the chat down at the bottom, if you click chat, I think I can activate them on an individual basis to do that.
Yeah, I'm hoping everybody's still awake. That's the thing. I mean, this is riveting stuff.
Yeah.
You know, it's really hard to make what we do for a living interesting, but we do our best.
Exactly. Yeah, it can sometimes be a little dry, but when we can save money or get some money to help with the business staying in business, it's always very helpful.
Yeah, but there could be no bigger compliment to us than to reach out and ask us for help on something that that relates to PPP or the forgiveness or any of the credits that are available. That's what we're here for. We love to be here to serve, and so anything we can do to help. And we're so grateful that everyone took time today out of their busy day to check in with us, spend some time with us, and hopefully you felt that you received some value from today's presentation. And we don't have any questions.
No,
we haven't gotten any questions. I guess that means you explained it well. So,
or everybody's so confused they don't know what to ask, right?
So we want to thank everybody. Have a wonderful rest of your week. Go out there, make some money, and God bless all of you. We wish you all the best of luck with the success of your business in 2021, and let's go out there and make it a successful year.
Absolutely. Thank you.
Oh, wait, Christine does have a question
coming up here from Christine. I can even maybe unmute her if she wants. I think she might be having some technical difficulties there with
I am having.
Yeah. If you want to put it in the chat, Christine, we can.
And I suppose too, if we want to make sure.
And yeah, you could always email us after, and we'll get back to you. If I do see she's typing here in the chat box, so hopefully
we'll give her a minute.
I think she's going to email us that.
Okay. All right.
Okay.
All right. Okay. Thank you all very much, and have a wonderful rest of your day.
Thank you.
Bye-bye now.